right, so the next piece of or type of funding that you can get on the business side are the business lines of credit. Now, everyone, and I mean everybody, when it comes to the business world, they always want to get these business lines of credit just because they give you the most flexibility of pretty much all the different options on the funding. Because a lot of times when you want to get a large amount of money, but you don't want to have to spend a lot on monthly payments, the business line of credit gives you a lot more flexibility. So let me just kind of explain how that works. So whatever bank it may be, they'll give you a set amount. Normally, if you're looking for a business line of credit, you can get one for $100,000 and below. So that way you don't have to give as many financials. If you want a larger one, then they typically do require full docs in that process. But when you get the business line of credit, it's essentially like a credit card, right? It's like a large credit card where you can withdraw the money off. That's the biggest difference versus like the credit card option. So when you get those business lines of credit, you have up to 6 months on average to withdraw a full amount off of that business line of credit. So if they gave you $100K, then you can take off $100K over the course of 6 months, or you can do it all in the very beginning or towards the end. It's totally up to you. But when you have those business lines of credit, it gives you such a flexibility because when you start using them, you can actually start making payments on those business lines of credit. And as soon as you start making payments, similar to a credit card, you can actually start withdrawing some of the money back and keep that flow going. So that way, unlike the term loans that we spoke about before, the business lines of credit will give you that flexibility so you can keep using it. So I always recommend them as well to a lot of our clients. And that's why when we go through our process of getting you funding, we want to make sure that you have as many of these as possible, just so that you can have a lot more flexibility. Because if you have a term loan for $100,000, as soon as you start making payments or even receive that amount of money, you're already pretty much in the debt, right? But we can get you a business line of credit or stack them up, and you hardly are even using any of those. Okay, so we can stack them up over a long period of time. So the other benefit of having them is that when you do decide to withdraw, the fees are not too crazy, so you can obviously operate. Now, it depends upon which particular lender you work with. If you're dealing with a finance company, they can be a little expensive. But when we go through our funding, we try to have you work with a lot of the banks, credit unions that we deal with, okay? So that way you get the best interest rates, best terms, and you can maneuver and so forth, all right? Another piece to having a business line of credit is understanding that you're not in an obligation to start making payments back right away. So meaning that if we got you 10 business lines of credit for $100,000 each, okay, you can be in a situation where you're not actually making payments at all, even though you do have $1 million in access. So now, again, like I said, you got up to 6 months on average to take the money out, but it gives you a strong flexibility so that way you can decide when and how you do that. And I recommend this a lot for people who are in real estate because that gives you that freedom. So that way you're not worried about, using all the funds at once. And the other beautiful part about it is the more that you use and pay back those particular lines of credit, the lenders feel a lot more obliged to give you a larger amount of money. So what that means is, let's say you got $100K, you paid it back right away. You get another $100K, you pay that back right away. Now, when it comes to getting larger loans or lines of credit for maybe a 150, 250, 350 and beyond, it's a lot easier because you build that relationship. And that's why, it goes back to why we call this the banking podcast, because a lot of people, even though we do discuss funding mostly, a lot of people are thinking about funding and not banking. We're teaching you to work with the banks, not just to get money from them, but work alongside them so they can help you grow your business and you help them grow as well. So in this process, everything that you'll learn is about setting that up. Now, what are the requirements? How do you get these business lines of credit? The number one objective here is if you're going 100K and below, most of the banks will allow you to get them with just taxes, personal and business. Okay, 2 to 3 years ideally. All right. Now, if you're trying to get something higher, then that's when they start asking for all the other documents we talked about when it comes to the personal financial statement, the balance sheet, profit and loss, all those different pieces of documentation that you need just to show that you're financially capable of making the necessary payments back, because a lot of people get confused with just having a good credit score. You can have the credit score to get approved and go through the process of getting those lines of credit. But if you do not have the income to pay them back, that can hurt you. Okay. So you always want to make sure you're making money in the business. All right. Now, are there options for those that aren't making as much money yet? Of course, there's definitely options for that. But I always err on the side of caution. Make money, prove your concept while we work on getting you as much funding as possible. All right. Now, another part of the requirements for that is you want to have a higher score. So when you're looking at revolving debt, okay, so that revolving debt would be your credit card debt, other lines of credit, like if you have a HELOC or anything like that, you want to make sure your revolving debt is as low as possible. Okay. As low as possible, meaning under 20%, preferably lower if you can. If you can get it even down to 10%, that would be even better. Because when you're trying to get revolving debt, which is what a business line of credit is, you can't have a bunch of credit cards that are basically maxed out or at a high usage or even at 50% usage. Because sometimes in that situation, some banks are harder on you than others, so they may decline you simply because of that. All right, so when you're looking for this process of making that work when it comes to the lines of credit, understand that your credit file is not just about how good your score is, but what is actually on your credit report. Okay, so having the business line of credit option, you got to make sure your personal credit cards are at the base low percentage of under 20%. Okay, to get the best highest chance of approval. The other part of that is the actual types of credit cards you have. What does that mean? Meaning that if you have credit cards that are very high or very low in terms of the limitation or limits on the cards, you may get a smaller business line of credit. So you want to make sure that you start to build it up with positive trade lines on your personal credit, so that way you can actually use that and function, because when you want to get approved for that business line of credit, they will see what other similar level of credit that you have on the personal side. They will normally give you more on the business, but if you have a bunch of $300 cards on your personal credit, you are much more likely to get declined for $100,000 business line of credit. That doesn't mean it can't happen. It can happen still, but you want to put yourself in the best situation, again, which we can help you with that whole process. Okay. So it's very important that you understand that. And as you build, this will put you in the best situation.